Wel, bore da a chroeso cynnes I chi gyd bore 'ma. A warm welcome to you all this morning to this Social Business Wales Covid-19 update and cash flow scenario planning webinar. It will be me, Ebony Redhead, and my colleague Joelle Campbell with you this morning. Joelle and I both work on the Social Business Wales project as market development advisors. So we'll be doing a little bit of scene setting shortly for you, and then we'll hand over to our guest speaker today, Cathy Edge from Bridge Consulting based in South Wales. Cathy is a chartered management accountant. She works both in the private and third sector, and she's worked with us here at the Wales Cooperative Centre for 10 years or so as a provider of ours. So we're very pleased to have Cathy with us to go through the cash flow and scenario planning element of this webinar. So for today's webinar, we'll be looking at the current environment we find ourselves in. We'll be very quickly running through the financial support packages and the new schemes that have very recently been announced by UK Government and Welsh Government. And obviously we'll be considering market conditions and how businesses need to be scenario planning and considering the cash flow implications of these new schemes. And of course, the end of furlough, the job retention scheme, coming up very soon as well. We hope to provide some useful guidance for you. There'll be some links and some tools and resources as well to help you with financial planning and cash flow scenario planning. So at this point, I'll hand over to Joelle to talk a little bit about the current environment.
Good morning, everybody. So first off, we would just like to take a moment really to reflect on where we currently are. And as Ebony said, set the scene. So a lot of social businesses have been spending weeks and months planning for their reopening or expanding what they've been offering. COVID caught us all unawares, and a lot of us had to hibernate or pivot pretty quickly to deliver alternatives. So we've all been working on our plan B, really, looking at how we can reopen, how we can adapt and change our services. But in recent weeks, the rise in infection rates has really put a halt to that. Some of us have faced local restrictions or local lockdowns, which means that we've had to reduce what we offer or reduce the people that we can service through our social businesses. And combining that really with the end of a lot of the financial support initiatives that were initially put in place for COVID, such as Ebony said, the end of furlough coming up this month, but a lot of the bank support around interest-free periods has ended as well. So it all seems to be coming together all at the same time. So where we thought we were going for plan B and we knew what our new norm was going to look like and we had our models set up for that, we now find that actually that plan B might not work in these circumstances. So is it time really to look at plan C? So really there's that need to reassess what we thought the future was going to look like. The recovery is much more fragile than we expected. New initiatives are being announced. So what we need to do is look at those and really analyse if they're suitable for us. So next we are going to look at, sorry, my screen is freezing a second, at the UK government initiatives. So recently, Rishi Sunak, the Chancellor, announced a series of initiatives, which he called his winter economy plan. Within that, there was, of course, the long expected announcement on the next version of furlough, but he also mentioned some other initiatives as part of it. So the tax cuts, really, there was an extension for hospitality and tourism businesses, which means that they can continue to pay that 5% tax rate until the end of March next year. A lot of the tourism and hospitality businesses have been severely impacted. Their rate to recovery has been much slower, and now they're being impacted a lot harder with these new restrictions. So that's a welcome for those. There's also an extension of the payment scheme, the time to pay scheme, which means that VAT bills were supposed to be paid in one lump sum in March next year, but he's now given the option to pay those in much smaller, 11 smaller interest-free payments over the next financial year, which is a real big help with cash flows. And there was also an announcement around repayment terms for loan schemes, such as the bounce back loans and the coronavirus business interruption loan scheme. They had their repayment term extended to 10 years, which again is a really good impact on cash flow, which means a little bit extra cash going in every month. So we're going to talk a little bit now about the job support scheme. So the job support scheme is the new version of furlough. It's the follow-up scheme. A lot of businesses have been waiting for this, and I know there's been a lot of lobbying for announcements before. The new scheme has had a lot of publicity, and some positive, some negative. It's good that there's something there, but there's widespread acknowledgement that it isn't as beneficial as the previous scheme, and there's a lot more expectation on employers to contribute this time. Big thing to note about the scheme is that it mentions that it's there to protect viable jobs and reduce the number of people that are laid off. There's actually no definition of what they determine as viable jobs, and that is up to you as leaders and social businesses to decide which employees, which roles are classed as viable to your organisations. It will be open to all businesses, but there is certain financial checks that will be carried out on larger businesses. And a really good element of this is that you don't have to have been part of the previous furlough scheme to be able to apply. So if you hadn't taken part in furlough, or if you'd only put some of your staff members on the furlough scheme, so long as you have your employees on PAYE and you were registered for PAYE before the 23rd of September, you'll be able to take part in the new scheme. It's also designed to link in with the job retention bonus. So if you have employees that are still in employment at the end of February, at the end of January, in February, you should be entitled as employers to receive a bonus of up to £1,000 per employee that are still on your payroll. So when you look at the scheme, there's lots of information, so we've tried to make it a little bit more digestible for you. And we're looking at the features and the benefits for both the employees and the employers. So from an employee's point of view, they have to work at least 33% of their usual hours. Now, what that means is that they actually get paid their contracted wage for those hours. So under furlough, it was quite common for employees to have a reduced hourly rate as part of that. This rate, the hourly rate that people will receive for the hours that they work, has to be based on their normal contracted hours. And employers can receive up to a minimum of 77% of their wages. You are able to rotate who goes on the scheme, which roles, but what they do expect is that you to have the same work pattern for that person each month. And while on the scheme, employees cannot be made redundant or put under notice of redundancy while on that scheme. So it is worth, as employers, that you need to consider which employees you put on. So from an employer's point of view, they pay for the actual hours that employee works. For the hours that aren't worked, the employer and the government each take a third. The government contribution is capped at just under £700 a month, and employers have to pay national insurance and pension contributions for the employer. Employers have to have a UK bank account, and they have to operate PAYE system to apply. So in theory, it seems a really good scheme, but there are some words of caution and some things that we just want to flag up to you. As we said, employees cannot be made redundant or put on notice while the employer is claiming this grant. So if you intend making a role redundant within your organisation, you have to make sure that that employee is not taking part in this and you aren't claiming a wage subsidy for it. Payments are also in arrears. So what you have to consider is your cash flow, and we'll go on a lot more detail about cash flow, and Kathy's going to work through some examples with you later on. So in effect, what's happening is you as the employer will be paying for the hours worked, then you'll be picking up a third of the hours that are not worked. In the short term, you will also have to find the money to pay the government's contribution, and then you claim that back in arrears. So it could be that you have to cover that for 4 to 6 weeks, depending on your payroll cycle and the time it takes for them to process that and put it through. So there are the cash flow implications. Even though it's there to help, you have to manage that against the juxtaposition you might be in with decreased income coming in through your earned income as localized lockdowns happen and there's slumps in demand. So cash flow is going to be key to this, and it's been widely reported that it isn't as generous as the previous job retention scheme. So employers really need to do their maths to work out if it is a suitable alternative. Calculators are available online for you to have a look and to work those out. We've put a link here, but as I said, Kathy will also go on to those at the moment in a little bit. I'm going to pass back to Ebony now, who's going to talk in a little bit of detail about the Welsh Government initiatives.
Thank you, Joelle. I've seen there's a couple of questions in the chat room. We're trying to answer those as we go through as well. So onto the Welsh Government initiatives. So Ken Skates, Economy Minister, made some announcements last Monday, the 28th of September. He announced 2 schemes that equal 140 million in total for Welsh businesses. So I'm going to take you through those. So firstly, let's cover the local lockdown fund. This is 60 million of that 140 million to support individuals and businesses materially affected by local restrictions. So many of us are seeing local lockdowns in our counties at the moment. And this is going to be administered by local authorities. So similar to the rateable grants right back at the start, you'll need to apply direct to your local authority for these. So in terms of the detail, for retail, leisure, tourism and hospitality businesses with a rateable value of 12,000 or less, you will be eligible for £1,500 grant. For small businesses, that's businesses not retail, leisure, tourism and hospitality, with a rateable value of 12,000 or less, you'll be eligible for £1,000 grants. And then there's 5% of the fund that has been ring-fenced for businesses who don't actually pay business rates. So these will be discretionary grants of up to 1,500, and again, made by the local authority. So the best thing you can do with these ones is to contact your local authority for details, but also keep an eye on the Business Wales website for further details on those. Thanks, Joelle. So moving on to the Economic Resilience Fund Phase 3. This is the remaining 80 million of that 140 pot. And it's open to businesses of all sizes, including social enterprises, cooperatives, employee-owned businesses, the types of clients that we have. We've put a couple of links up there. The key really is to keep checking in with Business Wales for more detail on these. I think it's fair to say that we don't have a huge amount of information other than what's been put out in the announcements so far. And this is what we have so far. So in terms of micro businesses, that's 1 to 9 employees, the maximum grant is £10,000. Now, what's really interesting here is that you'll now need to find some match funding to access these grants, unfortunately. So for the micro businesses, you will need to source 10% match from your own business funds. For an SME business, that's 10 to 249 employees, there's a maximum grant of 150,000 available. And again, this time 10 to 20% match from your own funds. For large businesses, that's 250 plus employees, the maximum grant available is 200,000 with 50% match funding required. Now, 20 million of this has been ring-fenced for tourism and hospitality businesses, and there will be some discretion for higher levels of support for businesses in that sector, just recognising how particularly hard hit that sector has been through this, I think. Now, there's a clear message that came from the Minister in relation to this, that there will be a focus on transitioning to future delivery and not just sustaining current operations. So this isn't going to be the kind of support that will just support your current model. This support is there to help you to get your future post-COVID delivery model developed. There seems to be an assumption from what the Minister said that businesses will have been through the process of analysing and planning for how their business models will operate on the other side of the pandemic. So these grants are there to support businesses with that structure and to give the resources needed to thrive in the future, I believe was the quote. So this emphasises the need for robust financial planning. Now, the good news is organisations who've already applied for previous phases can apply to this third phase of the Economic Resilience Fund. As I said, the local lockdown fund, you apply via your local authority and contact them directly. And in terms of the Economic Resilience Fund, it will be via Business Wales. Now, the Welsh Government have said that the guidance and eligibility checker will be live from this week. So it's important to keep checking in. We've been doing that all morning, hoping that it would have gone live before our webinar, but at my last check, it wasn't up there. So just keep checking in with Business Wales for that eligibility checker, because that will be the first phase to go through. And then applications will open from the 19th of October to the 13th of November. Thanks, Joelle.
Okay, so I'm just going to talk through another initiative. We have covered this in a separate webinar, and we've included the link. Alan Jones from Social Investment Cymru took part in the webinar and explained the phase 2 of the Third Sector Resilience Fund. But just to give you a recap, this again is blended finance like the previous iteration. So it's 75% grant, 25% loan. The repayment scheme is going to be up to 10 years, and included in that is an interest-free 2-year period. They are still a funder of last resort, so what they would expect is that you would have applied to other sources. So it could be that you've applied to the Economic Resilience Fund phase 3. But what it is actually worth considering is, with the Economic Resilience Fund, you may need 10 or 20% of your own funds to match. If you do the finances and work out what a 25% loan repayment would offer you, this could actually turn out to be a more attractive solution in terms of your cash flow. What all of the schemes seem to say is that they're not going to be any duplication. So the WCVA fund and also the Welsh Government fund, they won't expect you, and the job support scheme, they won't expect you to be claiming, say, for example, money for a salary from 2 or 3 different sources. As we said, cash flow projections are going to be vital in part of this, and they will be expected. There are 3 elements to the scheme, the survive, improve and diversify. But what we would really recommend is that you contact the team at Social Investment Cymru, because they are fantastic at guiding you through different options, talking you through suitability and eligibility and what they expect. There is also something a little bit different in this fund. In this iteration, they are allowing unincorporated organisations to apply, but there has to be a firm commitment that organisations are going down that route of incorporation, and there's a minimum of 3 unrelated directors. But this is just something for you to consider as well as an alternative and part of the suite of support. As I said, we've got the link there to the webinar, and it's definitely well worth a watch. Other future developments could be further products and schemes with the Development Bank of Wales. In the announcement, Ken Skates, the Minister, did mention that he's in talks with and trying to develop some form of scheme with Development Bank of Wales. So it could be another launch of coronavirus loans, because I know that one, the money went pretty quickly. Or it could be an extension of the repayment terms for those. We're not quite sure at the moment, but what we would say is watch this space really and keep up to date with announcements. So where we're finding ourselves as social businesses is that we've planned plan B. Market conditions have changed. The government support, Welsh Government and UK Government support initiatives have changed as well. So is it a time for us to actually start preparing our plan C? So there's that realization really that market conditions are very different to what we thought. We'd all predicted what we thought our new norm was going to look like, but it turns out that we need to predict what our new norm is going to look like. So there's that acknowledgement that the financial support will not be the same, that most of us could be under localized lockdown. There may not even be a huge national lockdown and closures like there was before, but as businesses, we're going to have to adapt and change. As Ebony mentioned as well, there does seem to be a focus that the schemes that are there to support now are not about sustaining what is here. They're more about helping you transition to your new model and new delivery method. And I think there's an understanding that as businesses, when you go to these funds and these initiatives, you will have put some adjustments in place to your plan and have that clear explanation of why. So during the first phase of the pandemic in March, social businesses were really quick to respond and react. Some put their organisations into hibernation, some pivoted into completely new models. But I think the key to all that was that the cash flow forecasting, that enabled businesses to make smart choices of how they were going to get through that phase. And I think that cash flow forecasting and scenario planning are going to be vitally important now as we try to reshape what we had as our plan B and try and transition into our plan C and access and utilize as many schemes as possible. So what we're going to do next, we're going to pass over to Kathy, and Kathy is going to talk us through cash flow forecasting and look at really how that can be used to support these schemes and support your business through the next 6 months. So over to you, Kathy.
Hello, everybody. Thanks, Joelle. I'm going to talk about practically how some of these schemes impact on your cash flow and on your businesses, and how this is relevant to the schemes that Joelle and Ebony have been talking about. So we're going to talk about how can cash flow forecasting help your business, and what to do. Just a quick reminder about what a cash flow forecast is. We're going to talk about the cash implications on the UK and Welsh Government schemes. And also we're going to talk about scenario planning, which is what we don't know what's going to happen in the future at the moment. We're in a situation where the future is that much more uncertain going forward. And so scenario planning, the what if scenarios, what's going to happen if this happens or that happens, and translating that into a financial interpretation is really important nowadays. So we're going to talk about that too. Thank you. So a quick resume about the benefits of cash flow forecasting, because it's not everybody's favourite task first thing on a Monday morning. But I suppose the main benefit is that the cash flow forecast translates your ideas and your innovative plans for the future, in the Thrive future, if you like, and in the sustainable future, into financial terms. And it demonstrates to shareholders and stakeholders, I suppose, how you're going to thrive into the future. And that's really important, because from a funding point of view, you need to be able to demonstrate that in a format that is translatable into funding approaches. So controlling cash is critical to any business anyway, and knowing where you are with your cash is really, really important. And planning your future cash inflows and outflows, where you know there might be some peaks and troughs, is really helpful. If you know that you're likely to have income deferred, or if you know that you've got a lumpy element of cash to pay out, if you can plan that into a cash flow forecast, you can anticipate what that might mean, and you can ensure that you have sufficient funding in place, or that you can mitigate the corresponding income or expenditure or other income and expenditure, so that you can plan for a planned cash flow which enables you to continue through sustainability. I think that one of the really big benefits of cash flow forecasting is that if you can provide that cash flow forecast and translate your ideas and the future reality into something which is financially modeled, if you like, it can really help then make your business decisions. And that's what it's for there. It's to support the organisations to make good business decisions. Without the cash flow forecast, you might not be making good business decisions and be so informed. So that's one of the really major elements. I mentioned before, it shows potential funders how the business will operate, how it's going to be sustainable and in future majorly grow. And it supports your applications for funding for various of these different schemes. Thank you. Thanks, Joanne. So what we're going to just do briefly is review an example of a cash flow forecast. So a cash flow forecast is primarily a representation of what's going to come in and out of your bank account in the future. So it's basically your historical bank account, your bank statement translated into what you think it's going to be in the future. It's cash in, cash out, what's going to go through your bank account. And be aware that this example is quite generic. Each individual business is going to have its own particular idiosyncrasies and will vary depending on your particular situation, but the principles still hold. Normally, this one shows a 3-month cash flow as an example. Normally, you would be producing a 6-12-month cash flow, sometimes longer. This is showing monthly cash flows, which is reasonably good practice. But if you feel that your cash is critical, then you might be looking at weekly cash flows, or you might be looking at daily cash flows. I've worked with organisations that are really looking at daily cash flows. So let's look at this one on a monthly basis, which is good practice. And it could be that you have a more detailed, more regular cash flow forecast for the near periods, for the next few weeks, few months, and then it flows out onto longer periods for the future. So looking at this sheet on the screen now, you can see that the income and expenditure are lumped into particular categories. So we're looking at the whole income in individual categories and all the costs in individual categories. And when I said it looked like your bank statement, well, the bank statement is allocated, is analysed or demonstrated by day. It's a time-framed bank statement. Whereas in this particular instance for your cash flow forecast, for ease of understanding and interpretation, we look at the income first and then we look at the costs. So looking at the income, the first column on the left-hand side, we've got a couple of categories there, sales and grant income, for an example. Yours will be different inevitably. I think it's really important to say that we should reflect any sales or any income that has VAT in it to be reflecting with the actual cash that you receive. So if you receive an invoice, and if you're VAT registered, you receive a payment for an invoice with VAT, you should show the gross amount on your cash flow. And there's a note at the bottom, if you are VAT registered, then you need to add a section into the cost line to adjust for your VAT, net VAT payments. So everything should be exactly as you would expect it to come into the bank account. And also it should be when you're expecting the actual cash to land in your bank account, not when you agree that the money is due. It's actually when it actually lands. So in this particular example, we're looking at grant income of 2,500 in January. So that's when you'd expect it to hit the bank account. On the cost side, we've got, again, various categories. Yours will be different. But a couple of things to highlight is that in this particular instance, we've got quite a lot of lines of operating costs. So your wages, your electricity, your telephone and your marketing, your ongoing operating costs. But also we've got in here some capital costs. So these are the larger items that you're expecting to pay out for typically larger amounts of cash. So in this instance, initial equipment, 2,500, that would be what you actually pay for it and what your outgoing actually is from your bank account. Okay, so we've totaled up the income, we've totaled up the costs. Further down the column, you can see net cash flow, which is the difference between your total income and your total costs. This is really critical because it shows you whether you're cash positive or not. And in this instance, this particular organisation is cash positive in January to the value of £445, and February 280, March 180. It shows that there's more cash coming in on a monthly basis projected than costs going out. So finally, the format of a cash flow forecast is to demonstrate what your ongoing cash balance is likely to be. So we start off with an opening balance. In this instance, it's 0 at the beginning of January, and the closing balance at the end of January is the net cash flow that has been generated, £445. So beginning of February, the £445 is what you've got in your bank account, and then by the end of the month, that's been increased by 280, which is the generated cash for February. I think that's I think we'll move on to the next screen. Okay, so here's some tips for creating your Plan C cash flow that Joelle referred to. Firstly, allocate time to do this. We've all got lots and lots of things to do on an ongoing basis in our day jobs, and it's difficult to allocate time to do specific elements that require a little bit more time. So it's important to absolutely allocate some time to do this, and think about really carefully when the income streams and expenditure streams are likely to occur. Is it likely that they're coming in at certain times? Is it likely that they're not going to come in certain times? Because that's going to impact on your cash flow. Good example would be the job support scheme, where if you claim for somebody on the job support scheme in November, you will have to pay your element, as an employer, you would have to pay your element of salary to your employee, plus your contribution under the job support scheme, plus the government contribution under the support scheme to your employee in November, and then claim it back in December. So those are the sorts of things which are useful to be able to know when you're thinking about your cash flow and when the income streams and expenditure streams come in and out. Create several cash flows: optimistic, realistic, pessimistic, I've suggested. So that's 3 different alternative scenarios. It's the what if scenarios, and it's really useful from an element of risk from cash to see what might happen if you don't have this in, or what might happen if this gets delayed or reduced by 10% or increased by 50%. So create different alternative cash flows. And then this is the key to producing the cash flows in the first place. Make sure that you then, having spent the time, thought through the process, that you use that information as part of your business decision-making process, and it should be collaborative. So this information forms part of other information that you're using in order to make good business decisions. Finally, once you've allocated the time to do it, and you've thought about it, and you've used it in your business, then keep doing it. Keep monitoring it, keep changing it, keep updating it so that it retains its relevance. Thanks, Joelle. Okay, I want to say briefly something about the cash implications of some of the government schemes. We're going to start with the job support scheme. So this is a really, I think it's quite a useful infogram that was issued by the Treasury when the job support scheme was announced. But it does need a little bit of interpretation, so I thought I'd just run that through. So it talks about the amount of support that would be available to an employee working 33% of their hours, which is the minimum. And Joelle mentioned in one of her slides that if an employee is working 33% of their hours, they will actually get, under this scheme, 77% of their salary. So how does that work? Scratch his head. So the employee is working 33% of their normal hours. So that means there's 67% of their normal hours which they're not working. That's split 22, 22, 22 into 22% responsibility for the employer, who will be contributing to the employee's wages, 22% responsibility of the government, and 22% that the employee will not receive any payment in relation to their salary, to their salary. And so the 33% work that they're undertaking plus the 22 contribution from the employer gives 55% that is paid by the employer, which is the white box, as you can see on the pie chart. The government is contributing 22%, so 55 plus 22% is 77%, and that's what the employee will receive for working 33% of their hours. Thank you. We thought it would be useful to just talk through a couple of examples. So these are sort of generic examples, but this first one was the HMRC example that they put up when they announced the job scheme. So Beth works 5 days a week. She earns £350, but sadly, she's only going to be working 2 days a week, which is 40% of her usual hours going forward. So by earning £350 a week, that's £70 a day. So for the 2 days that she's working, she's going to earn £140 a week. Okay, so she's not going to be working for 3 days. And so each of those individual days divided by each of those individual days will be the responsibility. A third, which is 1 day's worth, responsibility of the employer. A third, 1 day's worth, responsibility of the government. And a third she won't receive any money for. So that means that her total earnings will be 140 days for the day she works, plus her 1 day, that is the contribution from the employer, plus a 1 day from the government. She'll be earning £280 for the week for working 2 days, which is 80% of her normal wage if she was working the full 5 days. And you can see then as well that the government contributes their £70 in that particular instance. So for this worked example, we thought we'd just expand that a little bit. So for this particular example, we've got 3 employees with full-time contracts, each employee paid £350 per week, exactly the same as Beth. So we've got Beth 1, Beth 2 and Beth 3 in this example. And again, the employer is only able to offer 6 days, 2 days per week, effectively, 6 days of employment against those 3 full-time employees. So what happens? Now, this sort of decision is made up of quite a variety of different considerations. Obviously, there's HR implications, there's personal implications, there's organizational implications, lots and lots of factors. But we just wanted to demonstrate to you that if you are under the impression that whichever way you play this, you will be paying out the same amount, it's not true, it's wrong. So just so that you can see, there's a couple of options here. So option 1, or which seems the most equitable and the first one that normally you would go to, I would have thought. Option 1, all 3 employees work the 2 days a week. So the cost to the employer in this instance is £630 per week plus national insurance and pension. And we've got a worked example sheet with more detail of how we've worked these out, which we will share with you. Be aware that this is a simplified example, and obviously the employer is also responsible for the national insurance and pension on any payment that they make to their employee, plus the national insurance and pension that any contribution comes from the government as well. Okay, option 2, another example, 2 employees work 3 days a week and 1 made redundant. The cost to the employer under the job support scheme in this instance is for the same 6 days working is £513 plus national insurance and pension. So you can see the way that you decide to allocate up the work if you are under the job, operating under the job support scheme, is critical because it will make a difference as to the amount of money that it's going to cost you as an employer. So that needs to be fed into those other considerations when we're thinking about what and what resources you have to undertake your various roles. Okay, thank you. Okay, so that's a quick highlight of some of the key elements of the job support scheme. the VAT deferment and reduction for hospitality and tourism business has a cash implication, because at the moment, anybody who's deferred their VAT from the March to May period will be expecting to pay it out in March 2021. And that means in your cash flow, you should see an outgoing of a chunk of VAT, which had previously been due in the first quarter of this financial year. And now that's been highlighted as an area where further cash deferment can occur. So now that cash flow forecast would not show the payment going out in March, but potentially, if that's what you decide to do, you could defer that over a period of time in the following tax year. Similarly, the hospitality and tourism VAT reduction to 5% continues to the end of the year. On the bounce back and Corona business loans, they were always issued on the basis of a 6-year term. So that means the first year was interest free and no payments. And then the following 5 years, the full value of the loan would be repayable over those following 5 years. Now, what the Chancellor has recently announced is that that 6-year period is going to be extended to 10 years. So that means that the remaining loan will be paid over a longer period, repaid over a longer period of time, and therefore the monthly charges will be less on an ongoing basis. The local lockdown fund, I think that Ken Skates has identified that in order to be eligible for this particular fund, you have to have demonstrated 40% reduction in your activity levels as a result of coronavirus and the economic situation we're in now. And so from that point of view, you will need to be able to demonstrate what your cash flow is going to be going forward and what your cash flow has been in the past. So in order to be able to demonstrate that reduction in order to achieve the grant. On the Economic Resilience Fund, there will be an element of participation from organisations from between 10 and 20%. And so therefore, some form of cash flow forecast is going to be required in order to be able to show and demonstrate the 10 or 20% that you as an employer will, as an organisation, will be contributing and why. So it's a justification purpose, really. Okay, thank you. Okay, so we've talked about the cash flow and the different schemes that are available. And here are some tips for scenario planning, because this is critical. It depends on your risk to the organisation as to which scenario you do, but because we don't know what's going to happen in the future, and the options could be quite variable for a lot of organisations, scenario planning, the what ifs, is really, really important. So work out the implications of varying income and expenditure assumptions. So make sure you're thinking about what are the key factors that might change and what would happen if they change. Take time to undertake this exercise. Allocate some time to do it. Allocate some thinking time, because being innovative and thinking outside the box is important in these sorts of times, and share this with other people. So this is an exercise in order to be able to provide useful business information and to help make useful business decisions, and to be able to be collaborative in making those decisions. It might be worth calculating your break even, that point at which there's no surplus or deficit, because it's useful to know when your cash is near crisis point in terms of more cash out than cash in. So on those, on that example of cash flow that we went through, the net cash flow line is the one that demonstrates your break even from a cash point of view. And that would be really useful to work out. Have you got a particular month where wages go out and there are other high expenses, and so that your net cash flow is in a negative situation, and what can you do about that? So anticipating and planning what might happen with your cash flow given different scenario will really help you manage your sustainability, and for the future, your Thrive solutions. Compare your outturns for previous years in comparison to the future projections. So just sense check, but also you can use this then in order to justify claims on the impact of COVID. And also create some key indicators that you can use within the business that will help you keep tabs on your cash flow. So what is your break even? What is your monthly wage cost? What is the likelihood that you will need more cash at a particular point in time, or that you will have a cash surplus? And use all this information in combination with other factors that you've considered for your organization as a whole. The financial information is feeding into the overall business decisions. And once you've done scenario planning once, do it again on a more regular basis, just to make sure that you're always one step ahead of where you might be in the future. Thank you. So just briefly then, we've talked through how to pull together a cash flow and what that means for some of the government schemes. We've talked about scenario planning, and the key thing is take some time to do this because it will be worthwhile in terms of planning for the future. Thank you. Thanks, Joanne.
Thank you so much, Kathy. You've kept us right on time, which is brilliant. Thank you so much. There was a lot of useful tips and information in that half-hour piece there. Thank you very much. We've put some useful links up here in relation to the job support scheme. The Business Wales cash flow planning guide is really useful, so we've put a link up there for that as well. And also you can find some information sheets and resources on our Covid-19 hub on the Wales Cooperative Centre site as well. And obviously we've put the Business Wales coronavirus advice link up there, which is where you'll need to keep checking in for the eligibility checker. We have had a question in the chat room. Please do put your questions in the chat room. Anything for Kathy that you'd like to check in with her on, pop it in there. We'll deal with it now. Someone has asked, when does the local lockdown grant go live? I could just say that from the information from Welsh Government, they've said that the eligibility checker will go live this week. Week commencing the 5th, so just keep checking in with Business Wales on their website for that, wouldn't you say, Joelle?
Yeah, because there's still a lot of detail to come out, so we're acting on what we have at the moment, and I think there'll be a lot more detail in terms of eligibility, any conditions attached to any grants, and the same with the local lockdown fund as well, which is going to be administered through the local authorities. I should imagine that when the local lockdown fund goes live, it will go live across all of the local authorities in lockdown. We aren't sure at the moment in terms of how long a local authority has to be in lockdown or anything like that. So these are all literally new off the press, really. So what we would really recommend is that you keep checking the Business Wales site and your local authority site regularly for any updates, but we are expecting them imminently.
Kathy, something struck me while you were talking, and I'm wondering if you could deal with it. It's going to be very tricky for businesses to balance demonstrating the impact of COVID on a business, especially with these local lockdown grants, with obviously demonstrating that there's still a viable business there going forward. And how can businesses strike that balance, specifically thinking about cash flow?
Okay, so I suppose it depends what you're trying to present in your cash flow, if this is for a funding situation, but and the impact that there has been. But in a cash flow, for example, you could always put separate lines for categories which have been affected by COVID-19 or not. That would be a reasonable way of demonstrating the impact specifically of COVID.
Thanks, Kathy. Okay,
something else that that I think might be helpful. Who would you recommend, Kathy, carries out the cash flow forecast? Would you recommend that's done by staff, board, external expertise, and how often really would you recommend?
So I suppose each individual organisation is different, and so some larger organisations are going to have the resources available to be able to provide the support to produce the cash flow forecasts, and others aren't. In which case, an external person would probably be the best sort of person to provide them. And I think the main thing to say is that this is should be a collaborative approach, and it should be that the senior individuals within the organisation should be looking at these as a broad base, as a group, and it's not just the decision of one individual within the organisation.
Thank you.
That's great, Kathy. Thank you so much. What we've tried to do today is pull everything together in terms of the most recent announcements in one place, so that you have the information. Obviously, that more detail is going to follow from Welsh Government via Business Wales and obviously via the local authorities. But I think this is where we are at the moment. We've recognised from these announcements how important cash flow projections are going to be in terms of going for the grants, in terms of weighing up the options with regards to the job support scheme. So we hope that this session from Kathy has helped with that. And obviously you can check in on our Padlet that I've put the link up in the chat room, so you can download any resources that Kathy mentioned during her presentation. If you need any further help, please don't hesitate to get in touch with us here at Social Business Wales. We are ERDF funded, Welsh Government funded, to provide that support to all social businesses across Wales, whether you're a cooperative, a social enterprise or an employee-owned business. So we've put the contact details up there. If a question relating to this webinar pops up after we've finished today, please do email us on sbwinquiries@wales.coop, or you've got the telephone number there as well. We've got our COVID-19 hub, which has lots of resources in it, so you might find something useful there too. And again, on our Social Business Wales page on the Business Wales site too. We'd just like to mention an upcoming webinar. Obviously, with the job retention scheme coming to a close at the end of this month, we felt it was about time for an update on HR. So we have a webinar relating to HR and furlough coming up on the 20th of October. And we'll make sure you get details of that. Obviously, if you said we can contact you following this, you'll get the links for joining that webinar as well. I think that's it from us today, unless there are any other questions. I just want to say a huge thank you to Kathy for joining us today. That was brilliant.
Thank you.
Joelle, have you got anything to add? Joelle,
no, from me, but just thank you all for taking part.
Yeah, thanks very much, everyone. We hope that's been useful, and we hope to see you again soon. Take care. Bye.